This week, we're talking monthly trade data, consumer sentiment, and supply and demand numbers. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us, as always, is livestock economist Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
What are you doing now that there's not text messages from election candidates bombarding your phone every day?
I sure have a lot less spam going to my text messaging, that's for sure.
Well, we'll talk a little bit about election results and what's going to happen in the new administration coming up in a little bit. We'll also break down those reports. But first, let's recap what happened this week in the markets.
Yeah, Megan, this week on the cattle side, we saw lower prices generally. So live fed steers down roughly $2.60 this week. Those feeder cattle markets were steady to $5 higher on the week. On the futures side, December live cattle futures contract closed down $2.30, and the January feeder contract was down $1.90 this week. At the same time, we saw December corn futures up 15 3/4 cents this week, also not helping us on the cattle side. Choice box beef prices were down $6.10 this week. Chucks really led the way down in terms of choice box beef. On the hog side, cash barrels and gilts were up 75 cents this week. The December lean hog futures contract closed down $3.40 this week, and we lost 75 cents on the pork cutout value this week.
Definitely was a good day to have a rebound on the pork side of things, at least Friday afternoon, because it's been struggling a little bit this week.
Certainly a lot of volatility as we went through this week, that's for sure.
All right, let's take a look at those slaughter numbers, Scott, as we look at both cattle and hogs for the week.
Yeah, so USDA tells us for the week ending November 9th, a run of 619,000 head of cattle this week. That's 4,000 more than we did a week ago, but 4,000 less than we did the same week a year ago. And on the hog side, a run of 2.605 million head of hogs this week. That's down 48,000 head from the run last week, but up 27,000 head from a year ago's run.
And as we take a look at those comparisons year over year.
Yeah, so we're down 3.7% on cattle slaughter for the year and up 1% in terms of hog slaughter.
All right, monthly trade data, first report out this week. And I think there's a really interesting story to tell on both the beef and the pork side of things. Let's go ahead and start with beef.
Yeah, on the beef export side, 240 million pounds of beef exported in September of 2024. That's actually up 3.6% from what we did September of 2023. When you look at the individual countries here, Japan, South Korea had increases relative to year ago levels. And as well as we've talked about on pork for quite a while, there was a lot of other countries that typically don't list individually that were also important to the positive side of this. Now we're still down 2.9% when we look at the year-to-date beef export numbers. But when you look at the value of beef exports, we're still higher than where we were last year.
I don't think we can talk about beef exports without talking about that import number as well. And as you alluded last week, we have not really slowed those down whatsoever.
Yeah, that's right. So the September numbers gave us 385 million pounds of beef imports into the United States, up 23% relative to what we did a year ago. And when you look at the year-to-date numbers, nearly 600 million pounds increase year-to-date this year relative to the same period in 2023, just 21% higher this year-to-date than what we did in 2023.
I want to talk about pork exports first, and then I'm going to come back to the whole trade conversation in general. Talk a little bit about what we saw in terms of pork exports for U.S. pork in September.
Yeah, so a strong month. I think we're getting to the point where we may call 2024 record levels, both volume and value, as we go through the remainder of this year. For September, 549 million pounds of pork left the United States. That's 7.2% above what we did relative to September of 2023. When you look at the winners here, so Japan up slightly, China was important this month, up a little more than 13 million pounds. And as we've been saying, all those other countries we don't tend to talk about, up 32.5 million pounds September of this year relative to last year. And when you look at pork exports year to date for 2024, it's 243 million pounds above what we did same period year to date 2023.
When you look at what are doing in terms of beef exports, um, specifically focusing on value and even volume, knowing with what we're doing in terms of herd size, would you imagined in 2023 us talking about volume and value at the level we're talking about this year?
So perhaps it's not as bad as we would have once thought, although down in volume probably this year when it's all said and done. When you look at September in particular, the export value up 6% in September. I think that just tells you, even at the high prices of beef that we see today, the combination of price and quantity has certainly been good. Now, I do think one of the trends that we're beginning to see, so we kind of peaked out in mid 2022 in terms of beef exports as a percentage of domestic production. And we've been trending down since 2022, mid 2022. And so these high prices continue to weigh on our ability to export more beef to other countries.
Consumer sentiment also out this week. As we take a look at this number, it's really kind of a bright spot in numbers and in consumer sentiments just overall.
Yeah, so a strong November preliminary result we got out of the consumer sentiment report this week. So up 3.5% month over month, up 19% year over year in that overall index of consumer sentiment. Now, I'll say, let's remind ourselves, all that survey was done pre-election day. So the results of the election can't have a lot to do with how consumers were answering that survey. For me, the one that I think just really stands out, so the index of consumer expectations up 38% year over year, just tells you the interest that we see going forward in terms of expectation. I think some inflation slowing is beginning to get consumers more excited about the look ahead. We aren't back to where we were pre-COVID in terms of the overall index, but we've gotten ourselves a lot closer, especially with this positive month that we see now, than we've been for a while. So coming out of what was roughly late 2022 of kind of the trough, if you will, although some volatility, we've been generally trending up since that period of time in overall consumer sentiment.
Supply and demand numbers also out this week. Earlier today, as we talk on Friday, as you take a look at those numbers, what did USDA do this month on the livestock side of things?
Yeah, so I go generally, if we talk about 2024 projections, which we're getting a lot better at, given we have 11 of 12 months in the books at this point. And I say we, USDA in this case. So not a lot of changes in those numbers. A modest increase in beef production for 2024. USDA's been chasing that higher for the last few months. They did reduce pork production in 2024 by 90 million pounds this month relative to their projections in October, but not a lot of change. They did increase prices for 2024, not a whole lot, 50 cents more on the fed steer price, $1.25 higher on barrel and gilt prices. Maybe that's the big one for 2024. Slightly raised chicken and turkey prices as well. But for 2025, so USDA increased their 2025 beef production estimate by 355 million pounds this month relative to October. So 26.3 billion pounds is their projection of production for October. That compares with 27.1 billion in 2024, given their current projections. So we're getting closer again to not a big decline in beef production for 2025. But that's a big change. They did reduce pork production by 115 million pounds, raised prices. So fed cattle up $1, barrel and gill prices up $1 relative to what they were saying in October. Chicken price also up $1. From a feed perspective, no real change again this month. So corn prices for 24-25 still at $4.10 for a season average price, and $320 soybean meal, again unchanged from October.
As we look at that and start to think about 2025, is that maybe more of a reminder to manage some risk as well, knowing we could see prices go up, input cost or feed cost are fairly reasonable at this point, to make sure we're not losing opportunity and potential profitability and laying that on the table?
Yes, I think nothing has changed in terms of the opportunity for risk management, and frankly, relatively inexpensive if you're willing to get a little bit out of the money in some of the things like LRP contracts. And so maybe you don't need to be right near in the money, if you will, and you're willing to be a little bit out of the money, especially on the cattle side, just to protect against a more catastrophic outcome that could happen. If domestic demand in particular, were to dry up for, let's say, beef in 2025, that'll certainly reset prices. I keep saying I think there's opportunities for higher prices, but I do worry there's more downside risk. So let's be careful about protecting that risk and doing it in an inexpensive way, just to make sure that we're covered against these what could be lower prices.
All right, before I let you out of here today, election results on Tuesday. We will see Trump administration 2.0 in the new year. As we start to hear rumor mills about potential secretaries of agriculture, trade representatives, chief ag negotiators, what are some of the things that you're watching, and how maybe U.S. agriculture is then projected and sits then on the global stage?
Yeah, so I think one of the very first things here that has to be managed somehow is Farm Bill. I might be a little surprised to see us get something in lame duck, given that Republicans have control of both the House and the Senate and the White House. So maybe that suggests 2025 is where we'll restart, if you will, or reset and think about getting a 2025 Farm Bill written, which would frankly be almost in line with how long we had to delay when the 2018 Farm Bill was passed. So I think that's one thing that we're going to watch, and then what's going to be in that Farm Bill. I continue to see some interest in maybe a short-term payment program to help crop producers who have seen very high input costs in many cases. That could happen more quickly. I think we've talked trade a few times. If one is going to put tariffs on products coming into the United States, does that affect our ability to export agricultural products out of the United States? That's one we're going to have to watch going forward, because that could be one of the downsides as we look ahead.
Anything else this week?
I think that's the major stories that we've had for the week, Megan.
Scott, as we look ahead to next week, retail prices come out. Anything you're looking at there specifically?
I just think, again, we're going to look really hard at just how high, especially beef retail prices may be, and continue to watch whether at some point consumers might think about shifting away from some of that high-priced beef.
We'll talk to you next Friday. Have a great weekend.
You do the same, Megan.
So our weekly livestock market update delivered your email box every Saturday morning at brownfieldagnews.com. You can also submit questions and comments. And for a rundown of what happens every day in the markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.